What's going on, guys? It's Jordan with the Brantford Exchange, and today I just want to make a very quick video going over the basics of support and resistance levels. In a future video, we'll touch on the more advanced techniques when using support and resistance lines, but today, like I said, I just want to keep it very simple for all you new traders out there. So, first things first, what are support and resistance levels? So they are basically key price points that either tell you that the price is too low or that it's too high. So if it's too high, that's when you're going to hit a resistance like you see right here. People were like, okay, this price is way too high. So then it starts to sell off very aggressively. This price is too high, sold off aggressively. Same with over here. Supports are what they sound like. People are like, okay, this price is pretty low. So then they start buying it up. So a support, like I said, it's what it sounds like. It's going to hold that stock up. It's going to start pushing that price up. Vice versa, the resistance, it's going to resist that price from moving any higher, and then it'll start continuing to either break that, it could break this resistance or get rejected like it does here because people think the price is too high, and then it sells off, and then people will buy it when they think it's a good deal. So what these do for traders, technical traders, are they allow us to get a good idea when to buy and when to sell a stock. So when you're drawing these support lines, when you're buying them, you want to get in as close to the support line as possible. You do not want to get in at a resistance because see how it got rejected here 2 times. If I were to get in close to this price point, it has a good chance, according to its history, because that's how we trade. We want to look at past patterns and prepare for the future. We see that it got rejected at that price point, so it wouldn't really be a good deal buying somewhere, right around here. Buying close to a support level is a better option. You get a better deal. So the more times it bounces off a support line or gets rejected by a resistance, the stronger it becomes. So you see here how it bounces right off this key price point right here, this support line, around 3 to 4 times. So that shows us, okay, people think that it's a good deal around that price point. Whereas it gets rejected, 2 times around here, got rejected multiple times around here. People are saying, okay, well, it's too high. So, like I said, you want to buy at the lows, sell at the highs. So buy at the close to the support as possible, and then sell at the resistances. What these support resistance lines do for us also is they create margins. So if I were to buy, as close to the support as possible, and then sell at some of these resistances. So as you see, it got, resistance here. So that gives you, using this tool, the trend line. So I click the middle of my mouse, or you can just go right up here to the drawings. You go to trend line, you can see the percent. So this is about 3.66%, that margin. So in between each one of these gives you a margin to either, buy as close as you can to that support and then sell at a resistance. Another thing that I wanted to touch on was that old support levels become new resistance levels. So say it were to break below this support level right here. So it breaks below this. When it wants to come back up, when it wants to trend back up, this will act as a new resistance. So if it breaks down here, so say in the next couple days it's trying to come back up, this would act as a resistance where then it can either get rejected, trend down, or break above that, hit this resistance, bounce off this, and continue trending up. That's how you know something is trending up, when it continues to break resistances and it bounces off the supports. And then if it's trending down, it'll just continue to break supports like you see here. Rejected by the resistance, break support, break support, break support, break support. You could draw a support line right here. So it bounces off that again. And then, it also gives you the another margin. So the more support and resistance lines that you draw, the more margins that you have. Going over to another stock that I can just show you guys how I break down. So this is DRIP. Not that it plays a significant role, just if any of you were curious. Like I said, old support levels become new resistances. This is actually a great example. So as you see right here, this is DRIP. This was a low point in DRIP. This was, April. It had a low right here, so I'll draw a line across. And then you see, you want to get, when you're drawing the support level, you want to get it as close to 0 as possible. And if that's like too much of a pain for you guys, then you could just use the price level, which is this. I just like using the trend line because the price level, here, I'll show you. The price level, if I draw that, it's like indefinite. It'll just keep going, which can get like, I don't know. For me, I just don't like that. I've just always used the trend line. To get rid of them, all you have to do is just left click, or right click, excuse me, and then hit remove. But back on topic, like I said, old support levels become new resistance levels. So you see this was a support. Now it's starting to get rejected around that support. It's acting as a resistance because it broke below that support. And then the next time it tried to contest that, you see it getting rejected. So you always want to keep that in mind. I actually broke down this a little bit, but I'll just remove these like I was talking about. Get rid of them. Get rid of that. Okay, so when I'm drawing them, like I said, you want to look at the critical price point. So I see a critical price point here, right here. So I can start breaking it down. Some people like to draw it at the whisker right here. I personally do not, because that just shows you what it reached, but not actually what it closed at. Cole actually made a video breaking down these candlesticks in the previous video. So we could draw a support line right here, because that is a key price point. And you also see that it bounced off that pretty aggressively. So you get to that. And then, just for an example, we can go across this. And you see it starts to build on that line. It bounces, and then it breaks below it. And then it starts coming back up and consolidating. Because, like I said, when it breaks below, it becomes a new resistance level. So you see it got rejected a couple times. And then ended up breaking above it. And now you see it consolidating, bouncing off it, and trending up. And then it comes back down, bounces off it, and trends up. So these are, so say the stock did not even cross right here yet. So that's just a line to show you, like, if it did not, we don't know what this is yet. Say we don't know what that is. If I were to draw this line, this will help me better prepare for the future, because when I'm trading, I will keep that in mind. Okay, it bounced off of, say, 576. So in the future, I know that it has a support level at 576. So that is one significant reason as to why you want to draw support and resistance levels. So then drawing a support, like I said, look for critical points where the price turned. So right here, you can draw one right here. Go across, draw it. That. And then you see it goes across, gets rejected at that level, right? So then in the future, if we were to drag that across, it might, it could either act as a, here, I'll actually drag it across because that's a perfect example. Oops. This is where the price level can come in handy, but, so yeah, see? This resistance, when it broke above that resistance, see how it acts as a new support? So trends up, breaks above that, acts as support, trends down a little bit, bounces off that because the when you break above a resistance, that'll act as a new support. Vice versa, old supports become new resistances. So then trends above, breaks above that, bounces back down off that old resistance level, and continues to trend back up. So those are pretty much the takeaways from this video, how to draw them. Drawing them is very simple. Like I said, you just look for the critical price points, whether that's the highs, the lows. Draw it across. You could either draw it at where it closed, you could draw it at the whisker, whatever you feel comfortable with. Identify the margins, and then getting as close to that support level as possible. So if you guys have any questions about support and resistance levels, I tried breaking it down as simple as I can for you guys. It's honestly not hard at all. Like I said, in future videos, we'll go more in depth with it. But like I said, this video is very simple. This is basically for beginners to understand support and resistance levels and the significance of them. So if you have any questions, leave them in the comments below or message Cole or myself directly. And if I didn't touch on anything or you're still not understanding something, we'll be glad to help you. All the links to the social media will be in the description below. Feel free to join the Discord chat, which will also be in the description below, where you could talk to Cole and I and see what we're trading for that week. But that's going to do it today. So I hope you guys enjoy the rest of your week, and thank you for watching.